The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the deep freeze of Tucson, Arizona, 28 degrees, if you can believe that. Snow on Mount Lemmon, so it's a little chilly puppy here. We start the show looking at the DAX. It still looks like it's made a bottom, folks. Started to have a pretty good rally. Following that up, we looked at the FTSE. It's even looking better. So that's the key thing to keep an eye on from the side of Europe. But the big thing, of course, was the foreign exchange this week that I'm going to cover very exclusively in the, well, not exclusively. Everybody sees this stuff. What they know what foreign exchange is, but I'll give them my 2 cents worth because it was really important what happened in foreign exchange this week, extremely so. One of the things that they're talking about on the internet today is the fact of the collapse of the Shanghai index, and I wanted to bring this up here to show you the difference between the Shanghai and also the S&P 500 because there's a big difference here. This is a one-year period. Folks, if you're interested, I said on yesterday's show to defy human nature and go look at that Shanghai index on a weekly basis because it's setting spot on at a 61% retracement going back a long, long time. It doesn't look nearly as bearish when you look at it on the weekly basis. It looks actually looks very positive, as a matter of fact. Whether it's going to change or not, I don't know. But the stock market doesn't look nearly as bad as they're telling us in the news. I mean, last night, if you remember in yesterday's show, you know, we were talking about the E-mini S&P, the importance of that 2440, 2450 level. And if we look at that on a very close basis, you're going to see here we made a beautiful ABCD pattern in this over the last 3 trading days. You'll notice the AB leg came down to a 78% retracement of the low on January 2nd. We then made a beautiful ABCD pattern, and these are 50-point handles, folks, so it's moving $2,500 to $3,000 at a time. And then from that C level yesterday, we came all the way down. We dropped 50 points all the way down to the 2440 level. Then we had a really strong rally last night that's actually extended a little bit beyond when I posted this real early this morning. We got up to around 2480, I believe, but this looks very bullish, folks. The key here is if you look at that low on December 26th and you look at the low that we had last night, yesterday, that was a 382 retracement, folks, with an ABCD pattern. You know, Gartley stood up and chanted, buy that, buy that, buy that. So it doesn't look very bearish to me. I don't know where it's going to go from here, but it's going to be pretty interesting. Of course, we have the job numbers, and I don't know what they're going to say. Are they out already? I think they are, aren't they? I don't even know. I don't follow that stuff. I just see the reaction to it, but it looks like it's still got a pretty good chance of a pretty good rally in this area right here. We also, if you remember, one of the things that was saying that we might get a little bit of a rally here is if we looked at that volatility index, folks, you know, the doggone thing just never got any higher than the ABCD pattern and then is backed off. So that's another reason. There's not much fear. I mean, it shows it on the fear index, but the actual buying and selling is not shown in the volatility index. They'd be taking protection on this if they thought it was going to be, you know, something that was, you know, really spectacular. Now, something interesting happened in the gold market on the close yesterday. We completed a really interesting ABCD pattern here on the 15-minute chart that covers the last several days, and you'll see that we did go up and make that butterfly, excuse me, a 3-drive pattern up there at that. It hit 1350 cents, I believe, was the high. We backed off, you know, almost, well, we've actually backed off $14 already the first day. Now that'll be interesting because, you know, we're up 10 days. That's a big move. But the key that they're talking about in the annals of the internet, of course, is what's happening with silver. One of the things that looks really interesting from that standpoint is the fact that the gold-silver ratio, you'll notice that we've started to, silver's actually started to move faster than the gold. That's when that red line breaks down. That's the relationship between gold and silver. That shows that gold is weakening to silver. That's the first time that's happened in a very, very long time. Now with silver, we are very, very close to the 61% retracement on the long-term weekly basis. We exceeded it in gold. That number came in at 1292 in the gold. We get 1300, and the silver number comes in at 1602, and I believe we hit 1590. 1595, I believe, is what we hit. So these are going to be interesting ones to watch, you know, very, very closely. And as we know, if we keep watching the XAU, which is the gold-silver index, it is still lagging relatively badly, given to the fact that the gold and silver has had such a pretty good run. But we're having, you know, we're having swings in the stock market like we haven't seen before. Well, we've seen them before, but it's been a long time. It goes back to, I think, about 2009, 2008 is when we've seen these markets move. But the Dow is moving much, much more quietly now than it ever did in 2008 and 2009. Remember, on election night, the Dow got down 880 points. Well, earlier this year, I believe, earlier last year, we did have a 1,100 point move in the Dow in one day. But that, you know, corrected very, very quickly. And since that time, the biggest move I think we've had intraday has been about 700 or 800 points, which matches pretty much what we did in 2008 and 2009. Now, today at the break, we're going to have our good friend and neighbor, Arch Crawford of Crawford Perspectives, is going to give us an idea of some of these things that are coming up. We've got some big astrological things that are occurring, so it's going to be fun to watch. I wanted to share with you the astrological calendar that we have here from one of our friends and students over in Hong Kong. This is his astro calendar for you know, trading, and I'll be there. I'm going to be there the month of March, visiting friends and going to China and visiting students over there, doing a little bit of speaking. So that's always fun to go back and visit family and friends. So we'll be doing that, which will be a lot of fun. But there will be no change in business. The difference is that the S&P opens at 9:30 at night over there. So that means I'll be sleeping just 2 hours a day instead of my usual 3 hours a day. Well, anyway, we'll see what happens. You know, folks, I've had a really rough December and January losing friends. I'm up to 6. We lost somebody else last night. Jim Twentyman's main squeeze passed away of esophageal cancer. She was 72, and Penny was a really, really great lady and an incredible equestrian. Boy, she had some beautiful horses, and she was really a nice lady. Went very, very. Okay, folks, we're going to post a chart from our friend Steve Bose from Financial Cycles. You'll notice he was looking for a bottom to come in here in late December, and look for this rally coming into the solar eclipse that we've got coming here pretty quick, and the new moon, which Arch will be talking to us about. Looks like it's going to be cresting around that time. Bill, thanks for posting that. Yes, the Dow Jones E-mini had a range of 1,517 points. That was on December the 26th. That was the day we had the bottom and the reversal. So we'll see. And that, I think that means something, you know, very, very important. That means that if you remember that 1517, you multiply that times 1.618. That leaves a potential move in the Dow Jones of 2,500. That would be a 10% move in one day. So keep that in mind. That might happen. That's what happened in 1987, and it hasn't happened since that time. But you never know if that's going to happen or not. But we'll take a close look at that as we move on. Someone's asked a question about the gold, whether I think it's a major top. Well, I think it's got the possibility of doing it. If you'll notice from our friend Bill Cerubi, Bill will be on a week from today from Vienna, Austria, giving us a little update here. But the last time I chatted with him, he was looking for a high here in early January in the monthly gold, and we hit that ABCD pattern on the long-term daily, and you see the 3-drive pattern that we had in that. Yes, I would certainly be taking profits in silver and gold. There's, you're down $15 from the high in gold already, and that's just been a couple of hours. So that's a sign that something must have happened, but we'll have to wait and see. I want to spend just a second to talk about the TLT, because everybody's talking about the wonderful breakout that is happening in the TLT, and I just wanted to show you my 2 cents worth here from a technical analysis for the last couple of years. You'll notice that we made a 3-drive to a top pattern, ABCD structure, just about spot on at that 129 level last August. And remember, these levels are even still lower than they were in 2016 when it actually topped. And if you'll see that in just a minute, I'll post the weekly chart. But the important thing is you'll notice the ABCD structure that we had during the late 2017 down to the low in February 2018, the rally up to the 61% retracement in July, then the ABCD down into November. And you can see now that we've broken out here to the upside. It looks incredibly bullish, doesn't it, boys and girls? Except if you look at it on a little bit longer time frame, and you're going to be seeing what I think is really happening here, and that is what you're seeing is you'll see the high was made in May of 2016 at that 1.27 ABCD expansion. Now what we've just completed as of today, we've completed a 38% retracement of that whole move from 2.5 years ago. If it gets much above where we're at right now, then I'll have to say another point or so higher in notes, and I'll say we'll have to put dishwater on this one and say it's no good. But boy, if you look at the open interest, what's occurring in the notes over the last night's move, yesterday's move with the big move it had, the 2-year notes, the 5-year notes, they just had huge drops in open interest. We had small increase in the 30-year Treasury bond, very small, considering the large open interest, and the Treasury notes was also small, has an open interest of well over 6 million, almost 4 million, and the open interest was only up 25,000, so that's very insignificant, but it's showing that there's not as many buyers coming into this as they would like to see it. If you had to put a gun to my head, Bob, I would sell the TBT, I would be buying the TBT with a stop just slightly under the stop of yesterday. I'm not doing anything with that today because it's the holiday, and I've got to recuperate from all the traveling and stuff. And I've got another 5 weeks here in Tucson, and then we're off to Hong Kong for a month, which we really enjoy that because we get to see family and friends and go to China and stuff. So anyway, we'll be doing the show as normal, but we'll keep you up to date what's going on. As I mentioned, we will have Arch Crawford on here in about 7 minutes, and he's always fun to talk to. He's got some great ideas, of course, and it's always a great pleasure to have him on. So watch that TLT and TBT and that kind of stuff, because when you're talking about it in the news as much as they are, it just seems to me like it's a foregone conclusion. If we look at Apple here, someone's asked a question about the Apple. You'll notice that we held really good at that 146 level 2 weeks ago. We had a little bit of a rally up to 160, and then with the bad news coming out of China, the market broke down again through major support. That's just one stock, folks. It's been the darling of the stock market for a long time. Everybody that's bought it this year is underwater. That's not a good sign. And we'll see how the rest of them. Amazon is holding up okay. Actually, Netflix was up yesterday, folks. You don't want to sell a stock that is up when the Dow Jones is down 660 points and the stock is up. That's not the stock you want to sell. So find something else if you're looking to short, because a stock that's bully. You stop and think, folks. You got the stock market down 660 points and people are buying Netflix. The only one type of person that's going to be buying that type of Netflix, well, there are two types. One that has a lot of confidence in the fact that Netflix is going to go up, and secondly is the person that knows something more than the other person. So I wouldn't sell Netflix today. I mean, that's It might maybe sell it tomorrow, but it certainly doesn't look like a sale to me. Even Facebook was acting okay, and Google was acting okay, and even Amazon was acting okay. So the FANG stocks, other than Apple, have held up, relatively well during this. So I don't think there's any change. And the other one that's really important that we talked about all this week, and that is that banking index still looks great. It came off that 61% retracement at 80, and it got up to 88. It had a 10% move, and that was the one that was hanging by a thread on a cliff. So it looks okay to me. I don't see any difference. I don't know what the stock market's doing right now, but we're up a little bit. We're trading at 24.84. We're above the 78% retracement of that high from yesterday, I believe. I think that's exactly where we are right now. Yeah, we've already broken through that, so that tells us we're probably getting ready, to go higher yet. But boy, that ABCD that we made in the E-mini S&P yesterday is really important. We're down $17 now in gold, folks. It's important here because that's the half of a harmonic number, and if that thing doesn't hold here, it's going to have trouble. And that top was probably going to be in for. We were up 10 days, so we should get a 5 to 8 day correction in the gold market, which will be a very important one, to pay attention to, as we look at that. Now, we're going to have a little break coming up here soon, and we want to have Arch Crawford on. So if you have any questions, please let us know, and we'll try to answer them for you. If you want to call in, it's 877-927-6648 if you want to call in to talk to Arch or myself. We certainly appreciate any calls that you might have. And there's the music, so we'll pay a few bills, and we'll be right back with Arch Crawford. If you short that Canadian, hang on, folks. It's down 250 pips from the sale.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Arch Crawford of Crawford Perspectives, Tucson, Arizona. Happy New Year to you, Arch. Hope everything's okay.
It is grand. Thank you so much, and the same back at you.
Listen, my friend, we're going to take a little quick talk about the interest rate markets through the eyes of the Treasury notes. What are you seeing here, Sam? The whole world's saying rates are going to go to zero again. What's your feeling here?
The TNX has dropped from over about 324 to this morning at 255. That is a huge drop. I think I sent you a chart of that.
Yes, I posted it in the den. What's your feeling on what's happening here? Is it a situation where we're going to have continuing rate drops? Is that what it looks like to you?
Well, trends tend to continue until they don't.
the old adage, they continue till you run out of money.
That's right.
That's for sure.
Oh, the opening here, we've got 1,600 more stocks up and down on the tick. I don't remember seeing it that high in a long time.
Yeah, that's for sure. And I think the notes have backed off, just a little bit. So.
But the market is actually slipping now, so the futures.
Arch, the question that someone's asking here is one of your favorite things, and that's the gold market. We've had a breakout to 1,300 yesterday in the gold. Are you you want to share your thoughts on the gold?
Okay, I sent you that chart too.
Yes, sir. I've just posted it. Yes, sir.
Look at the weekly, and it's right back up to a trend channel line that it broke down from back in June or July. And that's heavy resistance area, and it's backed off 10 or 11 bucks right now. So I would say short term, it may pull back further. Intermediate to long term, it's the best action we've seen in quite a while. That we ran up from, what was it, 1160 something to almost the 13. But the 13 is pretty heavy resistance right now. So I have been recommending it for traders only the last couple of months because it's not proving itself until it goes over that 1370 to 80 neckline, which is now 5 years long.
Yeah, I know. Some of these are just absolutely amazing. Arch, one other question about silver. Do you follow silver as closely as you do gold? Because the gold-silver ratio has finally switched where silver is actually getting stronger than gold. What's your assessment?
It would be reasonable to expect that. So I would like the silver, but again, I need to see better technical action over a little bit longer period of time before I jump wildly into these things.
Yeah. Sam, I have a question because we get to visit because we live so close together, but I love to hear your stories of George Lindsay. And could you tell the folks a little bit about him, because he was a very colorful person. He actually died on the top of the stock market in 1987. He died on August the 25th that day, but he was a very colorful person. He was on the Louis Rukeyser show quite a bit. And just tell us your experience with George.
Well, I was he used to come to the cycles meetings monthly in New York, and he was quite a character. And I went over to his house one time. He lived in Greenwich Village, and he showed me some of the work that he had developed over many, many years going back, and it was really, he's a brilliant guy and a fascinating guy. What else should I say? He was rather humorous too. We enjoyed his stories.
He was
go to eat after the cycles things, and people were eating and drinking, and he would come up with some of the wildest stories.
Yeah, he was an astrologer too, didn't he? Do a lot of astrology.
I think he was very familiar with it. We didn't really talk about his interest in astrology, so I didn't know that.
Okay, well, the other question that I wanted to ask you, and that was about the cycles research is being coming back to life from Bulgaria, where David Perales had us. I understand that Tom DeMark and Jake Bernstein and Larry Williams are reviving it. Have you heard any news about that? I've chatted with Larry Williams about it a little bit, but they're going to bring it back as a nonprofit and not selling things like they were doing before. So have you heard any news about that? Because that should be pretty significant, I would think, because they've got a lot of data and a whole lot of software.
I haven't heard a word about it, but I'm delighted. I used to attend those meetings from the 50s, I guess. Yeah. And I met some fabulous people there, including, Prechter and...
Did you ever meet Edward Dewey?
I don't think so, but his college roommate was Lieutenant Commander David Williams. Who,
oh my gosh, yes, I know David Williams very well. Yeah.
And Dewey asked him to look into the astrology because he didn't have time and he didn't want to be associated with it publicly.
He certainly had an interest in it. I actually met Dewey in '74, he and Gertrude Shirk, and he really had a strong interest. At that time, I had zero interest, and I thought he was, Obi-Wan Kenobi or something. I shied away from it, but he had a strong interest in it. Hopefully that the cycles that comes out will bring us some of the things that they have. I know they have some great data and stuff that they'll probably bring to us. Arch, what's your feeling
I have all their old books.
Yeah. What's your feeling on the stock market here, Sam? What are you looking at?
Well, yesterday, the S&P, the Dow Jones futures, the market closed down 660, but the futures closed down 666.
Oh dear.
So I was wondering, is that the bottom like it was in March of '09, or is it the devil going to pop out here and trash things completely before this is over?
Yeah. Hey, we got to pay a few bills here in just a minute, but one other question that I have for you is, do you think this increased volatility that we've seen since September is going to continue through the whole year, or what is your? I don't know. I think people are going to get pretty tired pretty soon and going to need a break.
I think so too. But I wrote in the last letter, the December letter, that the VIX was not going as high as it should have with this much of a drop, and that I thought the reason was that so much of the volume is algorithmic and automatic trading. So it's not as emotional, and the intraday trends are extremely tight and regular.
Yeah, so they are.
It's not public. It's machine trading.
Yeah. Sam, could you stay with us for a few more minutes, and we'll have you back to talk about oil and wrap it up. What do you think?
Fine.
We'll be right back with Arch Crawford of Crawford Perspectives.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back with Arch Crawford of Crawford Perspectives. Arch, I've got a question from one of our listeners, one of our favorite folks up there in the state of Washington. Marshall would like to know what you're feeling on this new moon and eclipse that we have over the weekend. Any thoughts?
Well, we are seeing a lot of activity in the market, and either the eclipse could put in the low, or it could accelerate the downside. I'm more the feeling that it might accelerate the downside, but you have to be careful around these eclipses because they do cause odd and unusual movements in markets, in any and all markets. If you look at whatever you're looking at, you should mark where the eclipses are on the chart before they come up and pay particular attention to what coming in and going out of the eclipse period, whether it's getting better or getting worse. It is the most feared things in the ancient literature, this solar eclipse. And then the lunar eclipse is extremely tight. I think it's on the 21st. And we also get a Sun-Pluto thing in the next few days. I think it's the 11th. That is also extremely tight. It'll be like an opposition and a contraparallel on this within a day, which means it's very tight and that it has a stronger effect on, it can be earthquakes or tidal waves, or it can be markets, or it can be politics. It can be anything. These planetary things affect a wide range of things in terms of emotionality, and it can be in any human activity.
Yeah. Sam, your feeling on the oil here? What we've had a low down here of around $42 a barrel. We're now a good 7% above that at 48 and change. Have we made a bottom here in the oil?
Well, it looks more like it than it has at any time before. That was a strong support level at the 42 from way back. I have a line there. I don't remember what it was at the bottom, at the other end of that line, but it was strong support. And it is, I think it's breaking the intermediate to long-term trend line, but it may have to go a little bit more for that. So it's acting better. It's breaking up from things that it had, and we had a MACD buy back in late November, actually, and that sort of failed short-term, but it's not getting that oversold on the second dip, which means we're getting a divergence which could be turning the market up. I wouldn't mess with it on the downside anymore, for sure.
Okay. Well, listen, I'm going to let you go here because I know you got work to do, but I want to see you soon, so you take it easy. Have a wonderful start of the year, and I hope to see you next week.
On the general market, I'd like to say that...
Oh, I'm sorry. I meant to cover that. My bad.
It came down to the February lows, and it stood there for a while, and then it broke those lows. And yesterday we came right back up to the February lows on the major indexes. Wow. And started back down yesterday. So that's why I am quite negative on it still. Anyway, that's all.
Okay, that sounds good. Well, listen, we got gold down $20 today. I mean, from the high, that's a pretty big move, isn't it?
It sure is. It's down $14.20 right now.
Yeah, from the high, it's down $20. Just hit it. I had a limit minder in there to let me know that. So that's going to be fun to watch. Hey, listen, buddy, thank you for being on. We'll have you again soon, and probably for around the Chinese New Year in February, okay?
Okay, super. Thank you for having me on.
You bet. And all the best to you and Joanne. Arch Crawford of Crawford Perspectives. If you want to reach him, just go Arch Crawford, and he's everywhere on the internet. He's loved by everyone. So, folks, we're going to take one quick look here at the dollar index because it's had a huge move. It actually had a pretty big move and hasn't really done very much. But the currencies have had such big moves that it's been a hold on just a second. I've got the old chart up here. We want to get here so we can take a look at it. I wanted to point out the fact that it had to hold that 95 level. We got down to 95.20, folks. That was that 78% level of that low we had in October. That held it so far. That's when the euro got up to 115.60 on New Year's Day and then rolled over on that crazy thing. And then we had huge moves, of course, on the day following with the flash crash that we had in the Japanese yen. And believe me, folks, money is what makes these market moves. And if we take a look at this Japanese yen on a long-term weekly basis, it tells you a lot. Because if you'll notice, during 2017 and 2018, all it did when it got up to 115 was make 61% retracements of the high from 2015. And the low that we made just the other day was exactly 61% of the low in 2016. It was also the low of 2018, and we went down 500 points, and we've already rallied back 350 of those 500 points. That's not the sign of a really bearish market. So keep that very close to your vest because I think it's important. Regarding the gold, you'll notice here, I posted this just a little while ago when we were trading at 1288. We're now trading below 1280. So we've come down more than $20 in one day. That's our biggest correction in a long time. It was right at that ABCD level. The 61% on that chart, the weekly was 12.92, and of course we hit 1,350 cents yesterday during the 660-point drop in the Dow Jones, and then of course it seems like it's reversed. But there was a lot of emotionalism yesterday with that big move down, covered in the news very, very extensively. And of course they put the blame on all the politicians in Washington, which is probably where it belongs. So we'll have to wait and see. Yes, the market, the S&P has gotten close to that 2,500 level. That's not the level to watch, folks. That's that 2520 level. If we clear 2520 on a closing basis, that is going to be extremely bullish, for the fact that the low we made yesterday at that 2440 was a 382 retracement, and it was a beautiful ABCD structure. That was the way we started the show today. Might as well bring it up and end the show at this last segment, because I missed it. I actually was a little late to the gun on that. I didn't see it until about 24:52. I posted this a little bit later to show the areas we went up, and we're still going higher. We really haven't made the ABCD structure, because I don't know if we've taken out 24.96 yet or not. My beeper hasn't gone off. But no, it hasn't gone, but it's close. We've been to 24.92. If we get above that 24.96 level, that would be the first sign that we're probably getting ready to move. But that 382 retracement is huge. Boy, this gold is really getting hammered, folks. We're down now. We're almost down to 20. Yeah, we're down $22 just in one day. That's a bad sign for the gold. We'll see. 877-927-6648.
The secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's setup 9-count and trend lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to point out the euro here because we completed an ABCD pattern yesterday during that rally. Went right up to that 114.10 level, perfect ABCD. We've now dropped 70 pips off that high, and I want to end the show here. Well, we got another 3 minutes, or so we're okay. I wanted to bring this up for our friend Ruby, and you'll notice here, if we pull this up, this happens to be Sugar the Sweet. We remembered that we went below that $1,200 level. It should have been strong support. It wasn't, so we're going down to what we think is the last support, which is down here at 11.55. I don't know if we've hit there yet today, but I would be a buyer there at 11.55. I wouldn't risk more than a couple $100, maybe 30 cents at the very most, putting a stop at 11.25 because, you know, you were down at 10.80 at one time and you rallied all the way up. You had a 35% rally up to 14.25 per pound, and now it's starting to warn you. By the way, I will warn you about the supply demand in the sugar because Sarah has a herd of a covey, I guess, of hummingbirds out in our patio that she has anywhere from 8 to 10 hummingbirds on her feeders every day, so she uses a lot of sugar. So pay attention. That might be a factor where the hummingbird could bring the supply-demand situation in sugar into play. So let's kind of keep a eye on it. The most important thing in that S&P, folks, is 2520. That's that old high there. We brought that to your attention anytime. No, the birds are not frozen. They're cold. They stay here as opposed to going to Mexico. You know, if you should, you know, hummingbirds, those little tiny birds at little heartbeats of 400 beats per minute, they live to be 11 years old. And it's really amazing how strong they are. It's really incredible. Sarah has the most beautiful pictures of hummingbird nests that I've ever seen, including those in the Smithsonian. So we'll watch that. Anyway, remember, next Friday we're going to have Bill Cerubi, Bill Meridian from, he's also named Bill Cerubi, 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.